Welcome back to episode 5 of Credible Perspectives, where we're discussing all matters tax in this season. And today we are welcoming Dr. Regina King'ori, who is the founder and managing partner of RWK Associates. She started out building her institution, her company, from a shared office in 2014 and slowly worked her way up. She has been recognized in Kenya as a top digitally fit accounting firm, as well as Business of the Year Accountants and Auditors in 2022. For that, congratulations.
Thank you.
And karibu sana, and thank you for joining us.
Asante.
We'll go straight into today's conversation, which is all about tax and digitization. And we'll just begin from where it started from. Why did you decide to venture out? What was that journey like?
All right. So first of all, I'm so happy. It's an honor to be able to come and to be invited. So thank you so much. When I talk about my journey, it is very emotional because it's something that I've done with a lot of passion. Of course, and because I love entrepreneurship and I really talk to entrepreneurs, sometimes they ask me, did you know that you wanted to do consultancy? Because when you're starting a business, you're not clear, and that happens to everybody. So for me, I wanted to put food on the table. So it's not that I really wanted to do consultancy. I started as something that I saw possibly could give me something. So a friend, a family friend wanted some accounts to take to the bank, management reports. And at that time I was a young mother, so I had quit my job and believing that now I have to take care of the baby. And that time that I came to take care of the baby, I had done my master's and I've done my CPA, so I wanted a better job. So when he asked me and I was at home, I said, okay, let me do this. And because my previous job did not have a lot of exposure, I had to ask somebody to help me do them. So when I did, he paid me 50,000, and then I thought, oh, just one client, what if I have 10, what if I have 20, I can actually employ myself. So that is where the thought came in. Okay. But so I started as an auditor, per se, not as a tax consultant. And I did audit for about 3 years. And it was very hectic because I couldn't convert customers. Basically because auditors are very personalized in the organization. If you go to any organization, they will tell you our auditor has been here 10 years, 15 years. So they want to see what extra are you going to bring on the table. They are like partners. And so those 3 years, I couldn't even be able to pay rent, even that shared office. I couldn't be able to even manage the business. It was until those 3 years, I asked a friend, why am I not able to break even in the business that I'm having? And then she suggested I do a mentorship program. And when I went for the mentorship program, it's called Passion Biz by James Karundu. He asked me, who is your target customer? And remember, I've gone to school. And that also means that even if you have papers, doesn't mean that when you come to business, you also thrive. There's a lot to learn when you're an entrepreneur. So she also asked me, what is a problem in the market? So I had to go back and rethink. Every time when I knocked a door to a client and I introduced myself as an auditor, they would tell me, I have an audit already, but I have a tax case that is disturbing me. Yeah. So at that point is when I realized that this market, they had a lot of auditors, but the problem in the market was tax. Okay. So I had to reposition. James Karundu was a person who told me, Regina, reposition yourself as a tax consultant. And that is around 2017 when I now joined KESRA to study tax, because now this is something new I have to figure out, because at the end of the day, I need to grow the business. So I went back to school. I started practicing. I started now embracing that tax, and it has been a wonderful journey.
Okay,
Yes.
fantastic.
Yes.
Sounds good. You've spoken about mentorship, and I want to tie it with training, which is one of the things that you offer to Kenyans. How did that come about, and are you seeing success in mentorship and training?
Yes. Thank you. So James told me that people have to know you, and that is how we came to design trainings for tax. But I also realized when I started doing the tax cases, I realized that most of the tax cases came from mistakes that could have been avoided. So most of the entrepreneurs don't understand tax. So they keep repeating mistakes, like a very simple mistake of record keeping, correct record keeping. What are you supposed to keep? Which KRA will ask you at the end of the period for their tax compliance. So there were mistakes that could have been avoided. So I thought, why don't we tell entrepreneurs what tax is, what compliance is, what is expected, what are tax triggers? Because someone will keep asking, why is KRA always following me?
Yeah.
So we that's how I thought possibly we can just tell people about it. And James helped me design the first training, which was physical. I started tax trainings in 2018. We started physical trainings before COVID came, and then we switched to webinars, plus now physical trainings.
Okay, and have you seen success in that?
A lot. And even if we do a lot of free trainings, we do webinars, actually 3 webinars in a month. First, we do tax trends. We have realized, especially for the past 3 years, KRA has been doing a lot of changes, whether their system, the regulation amendment, there are so many. So we wanted to keep tabs with the changes so that we can just tell people this is happening, for them to be able to understand. We have a webinar for a sector-based, if it is manufacturing, education. Then we have a training on tax. We pick a topic, possibly tax audits.
Okay.
And we train. We've been able to train over 1,000 people per month. And every time I meet people, even if we don't get anything, they tell me I've been able to make better decisions because when I listened to you, I understood what was the problem and what was a missing part. So for me, it gives me that joy and fulfillment that there are people who are making better decisions in their business because of the webinars and the trainings. Yes.
Fantastic.
Yeah.
Go ahead.
We also have the taxation masterclass. We also realized that for the people that now come to the marketplace, they don't understand the theory and the practical is very different.
Yeah.
So for us, because we do a lot of representation to KRA, we understand the practical part of it. So the masterclass came in, especially for people who want to help clients with tax. They are able to understand the practical part of it. If somebody is in the office, they can also be able to understand the practical part of it and be able to help the company on taxation. Yes.
Okay. That's a lot on training that you're offering.
Yes.
I think it's good that people will find out more through this, this is what you're doing. You spoke about tax triggers. I want us to explore a bit on that. What do you mean by tax triggers?
Yes. They are triggers. A company should be audited within 5 years. Any company in Kenya. As long as you're doing business in Kenya, you should be audited within 5 years. But there are things that you can do that can trigger this audit more frequently. So we train about that. And there are people who keep asking, why am I being visited? Or am I... there are so many parameters. Which business do you do? Your turnovers. The more turnovers you have, the more visibilities that you have. The business that you have. If you have a lot of tax obligations, especially VAT, excise, you're more triggered to audits. But also we have others. If your company is always on a loss-making position, KRA want to know why are you making losses 10 years down the line is a trigger. Other triggers is you're paid by government or IFMIS. that IFMIS data. By the way, KRA right now is doing data-driven audits.
Okay.
They gather data from all sources. So they'll gather data from IFMIS, which is a payment system by the government, from import, from export, from KPLC, from all sources. So the moment they find data of your company, they will come back to you and they would want to audit you. So there are areas that you can, they can also be given information about your organization is a trigger. If somebody, an employee from your organization goes to KRAs, of course with the data, and says that you're evading tax, is still a trigger. So there are parameters, some are technical, which requires calculation for somebody to understand. Something like if you're having VAT and income tax and they don't tally at the end of the year, that is one of the biggest trigger. And you have to show the accountant or the owner how that merges, so that, and every record that you provide to KRA is a trigger. And those records should be done by somebody who is sober and understands tax. Remember, these returns are self-assessment. You sit down and write. You sit down, do VAT, pay. You do income tax. So you cannot come back and say, I did not know. A balance sheet has so many information that you give. Sometimes we think it's just profit and loss they are looking for. But the balance sheet, how it is done, can be an audit trigger. You cannot have a lot of credit sales, debtors, a lot of debtors, yes, your sales was low. You cannot have a lot of closing stock, yet which is not matching your sales and your purchases. So there are issues. Sometimes we use balancing figure, like loans, and we use it to balance your balance sheet. And you put there a loan of 20 million and KRA ask you, give us the loan statement. Immediately you don't provide, it shows that the whole accounting was cooked. Yes.
Okay.
Yeah.
So then the fact that post-COVID and when we embraced technology and digitalization, has that helped with compliance, especially for entrepreneurs and businesses that are coming up and when it comes to taxation?
Yeah, I think for after COVID, we were able to now sit down in the office and watch a webinar. Actually, for me, I was being told of webinars. Beyond that point, I couldn't understand what they were. So someone when they're working, they will just listen and be able to understand. So that is one. But also, since this government, Kenya Kwanza government came in, there's a lot of digitalization that has happened. Enhancement of iTax. The eTIMS, which was being introduced by Kenya Kwanza government, is now so enhanced. So they are simplifying. Right now we have a simplified method of paying, pay as you earn. Paying excise every day. There is just improving on their system. First of all is to push compliance. So as long as especially the president say that for VAT specifically, that is going to push us to 90% compliance. For me, it was a joke. By the way, I've done tax since 2014. That time we were in manual records. The ones I've worked in an audit firm where customers will bring their papers, we do manually, we file them in a file, and we don't even take to KRA. Just one day you wake up with a full, and you take to KRA. Then we came to iTax. Then now we are coming to, I've seen the system change, and they are very efficient. So when he talked about 90% compliance, I almost doubted. But when I see the changes under eTIMS, I believe that you are getting there. The auto-population of data that the system can automatically give you a position of this is how much you're supposed to pay without you being inputting data. It is top-notch.
Isn't that dangerous? Because they might decide that I need to pay this tax and it's not aligning with what is coming in.
Actually, when auto-population started, so many people got concerned because the truth be told, we are not compliant. And of course, sometimes I understand the entrepreneurs doing business in Kenya is not simple. And so when the systems came in, now it's you aligning them, telling them we are pushing to compliance. So you better be ready. This is how you're now supposed to present your books and present your business. Because someone will tell me, I'm going to be compliant, but there are other players in the market who are not going to be compliant. So my product is going to be very expensive than these ones, and I'm going to be kicked out of the business. So there's always that balance. And KRA should be able to understand also, how do we do for this other, to just make sure that everybody is at the same level, so that compliance can be equal to everybody. Yeah.
I think I need us to have a bit of a conversation on compliance. A lot of us are scared of compliance. You need to tell us as Kenyans that compliance is kitu mbaya. It works to your advantage more than your disadvantage.
Yes. Okay. And especially where you sleep with a peace of mind. And I always tell clients, there are people who will not accept their business to grow just because of taxes. They will believe that the more they expand, the more compliance will come, it will collapse them. But the moment you accept compliance, your business goes to the next level. Yes. So most of these businesses that you see them at the large taxpayer's office doing billions of money, they are businesses that have accepted compliance.
Okay.
Yes.
Right. You had also mentioned earlier something to do with tax trends, and I want to connect it with how you started in 2014 when it was manual to now we went through iTax, there's eTIMS. What does it look like from where you see it? How is it working better, and what do you foresee coming forward, coming on board with regards to tax in Kenya?
Yeah, the digitalization of tax has been massive, and I see them being able to. There's always something new, by the way.
Yeah.
Right now, we are even having a system for collection of monthly rent or income tax. And they also stated that they are going to push landlords to 90% compliance because not so many landlords are under the system. So, and custom systems being enhanced. So there's a lot of enhancement of systems, which is good. I'm seeing a point where that when you're doing business, your taxes will be predetermined. It is not you determining. It will be predetermined the same way we are doing VAT at the moment. So VAT, as long as you've given your PIN to your suppliers and you sell with the eTIMS, it just auto-populates. And right now it is auto-populating very well. In the beginning, it had so many errors. And we'll camp there and say, this thing has errors. And they'll tell us, just wait, one day it will not have errors. And we can see. And we can see that they are really able to make the system that it has minimal errors. Actually, right now, you can, because what you're supposed to do when you get the data, you compare with your manual records and see if there are any additional data that you should provide to it. But at the moment, it's very swift. So I foresee some places some areas that taxes will be predetermined. Yes. Yeah.
Any other thing we should be looking out for?
And also a lot of compliance. So since eTIMS came in, it has brought some audit under eTIMS. Those are audits that we didn't have the other periods of time. So eTIMS is able to, like now, someone will tell you, for us to do business, give me an eTIMS invoice. And eTIMS was given in so many variations. There's eTIMS USSD, that an individual can just put their phone and just issue an invoice. There's eCitizen, there's iTax portal, you can have it, you can download it. It is in so many versions, which accommodates everybody, from the lowest to the highest of the company. So someone will tell you, give me an invoice, and it will say, I'm just doing consultancy, 500,000. You go cyber, you produce and give out. Right now, because 2024 was the first year that was fully eTIMS use. Right now, KRA are sending us notices. If you did eTIMS invoice and you did not file for that income, barua ishatumwa. So check your email.
So what I'm hearing is that there are two steps.
Yes.
There is you giving the eTIMS invoice.
Yes.
But beyond that, you also need to file with KRA.
Yes.
But you'd also spoken about automation. So how is that working?
The reason why eTIMS came in is to make sure that every business, and it is a very huge investment, every business transaction in Kenya
can be seen
by
KRA.
KRA real time today.
Okay.
By the end of the day, all businesses around Kenya should be able to get them. So we have eTIMS non-VAT, which VAT is when now that one is doing the auto-population. But we have non-VAT, which is 5 million and below. And I've given you a case of that. I just did one business, 500,000. I did not file. June, I did a new return. That audit is now ongoing. For anybody last year who used eTIMS and they filed a nil or they did not file, you check your email. And that's why we had an issue about agricultural product, farmers, especially Murang'a County, who are selling avocado, if you remember that time, in the use of eTIMS. They were saying, now you're giving us the burden for compliance. Because now KRA is getting to know that you did a consultancy of 500,000, which they should not have known before. So in that 500,000, they're asking you for 30% taxes. Yes. So it's now understanding which businesses are we doing. Yes, so that they can collect taxes out of the system. So that is one. The second point is that eTIMS has a stock management system. And this is where most of us have missed out. We don't understand why eTIMS came to be from the old ETR. We had the old ETR, and then we were introduced to something that was called TIMS, which lasted like a year, and then we had eTIMS. eTIMS is a software. It's like a point of sale. It's a software. It has a stock management system. So, for instance, if you have a hardware, you buy all your purchases. So you go to, when you're buying your stocks, you give out your PIN. You get your stocks. Then you're going to sell. And because how VAT works is input, output, purchases, sales and purchases. You pay for the value added tax. So you find when I'm selling, I don't sell to all my customers with eTIMS. But when I'm getting my purchases, I make sure I get all the purchases because I need that VAT. But when I'm coming here, I select. So this is how eTIMS, this is where the game changer will be. eTIMS through the stock management. For instance, it can be able to pick an item. The old ETR, if you remember, if I bought something 50,000 on a hardware, they could pick the ETR 50,000, multiply by 16, and then no explanation of what you bought. eTIMS, you have to explain. 5 bags of cement, 3 bags of nails, you have to explain that part. So this is now where the issue comes in. KRA can pick one of your biggest item like cement. The whole year you bought cement worth 500 bucks, 5,000 bucks. But on your sales, because you're selectively selling, you sold 2,000. So where is the 3,000?
And if they've not been sold, they'll still be able to tell.
Yes. They come and do a physical stock. It's either on stocks or you underdeclared. Yes.
Interesting.
And that is now the biggest, now audit to move to that point.
Okay.
Yes. That's why we are talking about 90% compliance. Yes.
I'm not even sure where to go. But in 2025, the Finance Act, much as it was a very small document, as very many people claimed, introduced the significant economic presence tax to apply to all income derived by non-residents in Kenya. Let's talk a bit about that.
Yes. So SEP, as we call it, is especially for organizations that are operating in Kenya. They might not have a physical office, but they have physical presence in Kenya, so that they also pay taxes.
So they're incorporated outside,
Yes.
but have a branch or something in Kenya.
They might not even have a branch, but they have a physical presence.
Okay.
I don't know if Uber has a physical office in Kenya. So you find there are some businesses that operate that way.
Okay.
So how do we make sure that they pay taxes? So that is how it was introduced. So for us as a company, we also work with organizations that are coming to settle in Kenya and to do business in Kenya, so that we can be able to advise them. And SEP is here to just make sure that, you can also go outside Kenya, you register a company, and then you don't have an office here and you continue trading. So, so it's designed to make sure that taxes are not lost.
Okay.
Yes.
Okay. Let's look at regional integration as well. If you've seen recently, Tanzania has proposed to add an extra levy to go into the country. You've seen that?
Yes.
That's a levy or a tax to an already existing price. Yeah. So if you're leaving the country by air or you're going through the borders by road, you're adding. Is that, and considering East Africa community is trying to be as integrated as possible, what other scenarios have you seen that have come about like that, which may affect our integration?
Okay, when it comes to business around East Africa, there's a East Africa community and everything, just to make sure that we are able to move around. For me, I see such moves being political.
Okay.
And, for us as a country, we are very aggressive. If you compare, especially the way we do business. But also, if you also consider, for me, I work in so many sectors, we get a lot of items from Tanzania, especially when it comes to foods, animal feeds and food generally. So sometimes when I see the issues that are happening politically, I think also the East African Community Office should be able to bring on board and bring cohesion. And also nationally, let us understand that we have to work together. Yes.
Okay.
For instance, if today Tanzania would say we are not selling maize and those sunflowers, our animal feeds industry could collapse.
That's true.
That's the truth.
Okay.
So we need cohesion. We need to work together. Even at the border, when I talk to, because I have so many animal feeds companies that we audit and do tax for them. There's sometimes when they strive, you see the strife that is happening nationally, it happens at the border. Sometimes they'll tell us we stayed there for 2 days, 3 days, just for no good reason. So the businesses are being affected because of that. So there is need to just have harmony, because we can't live in an island. We have to work with this. Yes.
You've spoken a lot about agriculture. We've talked about avocados. We've talked about maize and sunflowers from Tanzania, and which is a sector you work in a lot. But you also work in other sectors. What unique tax challenges do some of these sectors experience? We can concentrate on agriculture and maybe real estate or manufacturing.
Okay. For taxes cut across. So the taxes that we have in Kenya, VAT, income tax, they all cut across. The good side with the agricultural industries and those ones, you find that they don't have VAT, which makes them a bit easier. Actually, for organizations that don't have VAT as an obligation, they are they operate much better. But taxes cut across, it's now upon the mindset of the entrepreneur. That's what I would say.
Okay.
So there are entrepreneurs who don't want compliance at all. There are entrepreneurs who have embraced compliance. And also how because also the tax representation, how the tax representation has been done for them before. Possibly it was very aggressive. They backed off, or they felt it was too much. So it's on their tax compliance experiences. So I wouldn't say that this industry gets
preferential treatment or
preferential treatment, no, than the other one. No, it's upon, do you have the correct tax expert with you? How is your compliance? And remember, there are also tax saving strategies, tax planning, that the tax expert can help you. If you work on those things and work on a plan, you can do in any industry and still grow and thrive.
Okay.
Yes.
Right. And you work with all these industries.
Yes.
So where can we find you?
So we are online, RWK Africa. Someone can find us there. But my pages, Dr. Regina King'ori, CPK, across all pages. We are there. They can come and learn on our webinars. I believe for taxes, especially for you to remove fear, because you have to outgrow fear so that you can do business in Kenya, and big business. Someone will tell me, which business can I do and no taxes? There isn't, not unless you are the bottom of the pyramid. Down there, you're doing 100,000 possibly on a month or less, which all of us want to grow. We want to do 1 billion.
Yeah.
So as long as you want to grow, you have to embrace taxes, compliance, bookkeeping, having experts with you. So you have to accept that. So when you come and learn, you get the muscle and you get the ability to understand that compliance is not complicated.
Okay.
So they can look at our pages. We have those webinars free of charge, and they can be able to learn more. Thank you.
Thanks so much, Dr. for honoring us and for giving us so much insight. I'm sure we've all learned. I have learned quite a bit.
Okay.
There's a lot of conversations I need to have with Kiari behind the scenes. But asante sana, and we shall be seeing you at the East Africa Tax Summit.
Yes.
Karibu sana.
Asante. Thank you for the invitation.
Karibu sana. And thank you so much for tuning in this episode. We have heard a bit about compliance. You will have an opportunity to hear much more during the East Africa Tax Summit that's upcoming towards the end of September. Santeni.